Well, let's head to Tanzania now. The country's largest financial services provider, CRDB Bank, has cemented its market leadership position with a quite impressive financial performance. It posted a $101 million pre-tax profit in 2020. The growth represents a 35% jump from $75 million, which it reported back in 2019. Well, Group CEO and Managing Director Abdulmajid Nsekela attributes the sustained performance to ongoing transformations that have unlocked the bank's abilities. Well, let's get the story behind those numbers. We're now joined by CEO of CRDB Bank and Chairman of Tanzania's Bankers Association, Abdulmajid Nsekela himself. Great to have you on the show with us, Mr. Nsekela. Now, of course, 2019 was quite a tough year, a year of many uncertainties in the wake of the COVID-19 pandemic. Despite this, CRDB did see a profit before tax jump about 35% in 2019. Now, you have pointed to strategic reforms implemented over the last 2 years. Give us some insight into that strategy that helped you navigate through that crisis period.
Thank you very much for setting this time for us. And as you said initially, 2019 was a very challenging year, crossed over to 2020. But we are very happy to see the result which we have achieved in 2020. This is not a surprise, basically. In the last 2 years, we have gone on a transformation journey with the aim of improving efficiency, but also changing the way we offer service to our customers. Most of our focus in 2020, 2019, and 2020 has been more of digitizing our processes and digitizing our services, but moving away from bricks and mortar philosophy to more alternative channel. We have accelerated our agency banking, coming from 7,000 in 2019 up to 20,000 in 2020. It's a remarkable growth of our distribution channel, which is cost effective. However, given the crisis we had in 2020 coming from 2019, the focus also was to focus on our own customers, looking what are the affected sectors. As we have seen, most of the country being locked down, some sector being affected, and for example, the tourist sector. So what we did is to be close to our customers, to see what are their challenges and how do we support them, to maintain their operations as they are going through the tough time, but also looking on the alternative solution on how we offer services. Given the health condition which was explained in terms of distancing, working from home, that means most of our customers were away from the banking halls. And that what we did is to offer a digitizations of most of our services. And that has given us edge on what we see as the performance of today. The other thing is to see what could be the solutions, because pandemic came up with the option in terms of challenges, but also brought some opportunities in the health sector.
Well, certainly looks like we've lost his connection there. We'll try get it back during the course of the show. Oh, looks like he is back. Mr. Nsekela, can you hear me now?
Yes, I can hear you.
Okay, great. So now let's just shift focus now. You talked a lot about capitalizing on the opportunities. Let's take a look at the operating environment. Would you also say the favorable operating environment was a huge plus for your business? Recently, we saw the Bank of Tanzania ordering banks to slash their costs. For example, the central bank said cost-to-income ratios must be below 55% by the end of 2022. They also talked about freezing dividends and bonus payments. How will you see this impacting the business of banking in Tanzania going forward?
For me, I think this is all about efficiency, and it gives a challenge to most of the leadership in the market to think differently. How do you continue performing better to make sure that investors still earn their dividends within the prescribed parameters? When you talk about cost-to-income ratio, which is around 55%, we have seen it's possible. However, there is a fundamental need for most of the banks to digitize their services. So the circular just came out, and for me, I think what I see is expressing about efficiency, stability, and ensure that the sector is healthy enough to continue accelerating the growth.
And of course, the bank also said non-performing loans must be below 5% of your books. What are your thoughts on that?
For me, I think that is achievable because 5% is still high. According to the sector entirely is around 10%, but it has gone down significantly. When you speak on specific for CRDB case, we are now around 4.1%, coming all the way from 9%. The measure we have taken has actually bear the fruits and results. And now, in terms of productivity, processes, being able to do a proper underwritings and ensure that our processes are fully automated and the control is placed. But predictive measure to identify potential loans which are either on non-performing or not performing well. From BOT perspective, the way they have tried to advise banks is to remain keen facilities. For CRDB, we are doing things differently. We are now moving on customer solution-based lending. When I say customer solution-based lending, it's moving away from traditional and structured financing framework, where you look in from the supplier point of view, the borrower, and the buyer. And we have seen positive results by doing so. And that will be our area of focus. But the other area we have navigated is to see how do we structure solutions for segment risk like women. We have come up with women solutions because it's the biggest sector, very trusted segment. But SME is an opportunity area where we have to focus more. So the directive from Central Bank is, I will take it positively, but it has to challenge management and executives. How we manage bank, how we manage cost, continue expanding. And digital will be the way.
Well, we do have to leave it there, sir, because we are experiencing some technical issues with your link. But thank you so much for joining us on the show today. Of course, that was Mr. Abdulmajid Nsekela. He is the CEO of Tanzania's largest lender, CRDB Bank.